Good evening, all. Ira Epstein with your financial market wrap-up. In this wrap-up, it's for Wednesday, and we're sitting here now on the 11th of May, 2022. The time, getting on to 6:30 p.m. So today was the day that I was looking for. I was looking for all kinds of volatility, and we got it. We got it galore. Your stock market started higher after it saw the CPI numbers. It gave it up. I don't understand what traders think was so friendly personally about the CPI number. What I saw was movement. I saw the old winter and early spring bidding numbers, if you will, that drives up the inflation, just shift over to new cars, air travel, dining out, and that's what I was looking for to happen. Are prices breaking anywhere meaningfully? No. Is there a ray of hope that prices aren't shooting higher? Yes. But in order to stop the rally, you first have to start what? You have to be able to, if you will, stall in order to get a break going. Now, one of the main components had been gasoline in this, and of course, you know gasoline is making a new high. You're listening to it on your newscast every day, and you're hearing a new all-time high on your local radio station. But when they did this report, energy prices were not where they're at now. They were down for that period, 2.9% versus the 11% increase. So things have to get weighed. Sooner rather than later, we all hope the inflation spiral ends, the market stalls and comes down. Was there anything in this report, though, to change the Fed outlook? Not one thing. Nothing. The 50 basis point hikes are there. You know the Fed took off 75 basis point hikes. I don't think that was a good move. I don't think when you negotiate or tell markets, it's one thing to be transparent, but it's one thing to be too transparent. You want to have in your arsenal things you can do, and when you say, I'm not going to do something, you sort of corner yourself in. I had not seen Fed Chair Powell make that, and I'll call it a mistake before, but I think that was a mistake. When you look at the metals, they're trying to give you a little bounce. The energies are sitting here back into the 107 area. You can see heating oil, which is still running to the upside, sort of stalling here in natural gas against the whopping 770. Big numbers. So when we look at the S&P for the week, just the week, you're down 4.38%. Let me give you the theme. Sell May and go away. Yes. You use the rallies and you walk away into the early part of the summer, still spring, into the summer, and then you take another look at the marketplace. But this idea that you're buying cheap, there's another two letters you can put on the word cheap, E and R, cheaper, something to think about. When you look at the S&P, you're still nosediving to the downside. You did get that attempt after the big Monday break at a big rally. It's called a Tuesday reversal. On Tuesday, the market spent what it had to. It didn't have to close higher. It had to work to be higher, and it certainly did that with the gains. Then it's given all that up. This is what bear markets do. Bear markets tend to make lower lows. They give you these flash rallies. Often, they're just that, a flash rally, weeding out that the market got too oversold and gives you a bounce. On the S&P, you're still making the lower lows at this point. You can see this. But I think the rallies, if and when they come off the Bollinger Band, I think the pros are waiting there because if you get the embedded reading, which you're right on the verge of getting, I think the market's waiting to sell the rallies then up here. And that rally, wherever the 18-day average comes in, is one of the spots it might be there. The NASDAQ is already embedded, past tense. So I think any rally from here into these zones are probably going to get good selling. I'll be looking for that. I've already put out my written updates for my clients tonight as to where to have them do it, with a caveat in there. I don't want to see a lower low made first. I'll share that with you. Then today's low. In the mini Dow, on the verge of developing the embedded reading. You've done it in the Russell. You don't want to get under this low of today. Get a good rally in here, and I think the pros will sell it. And I know you'll say, well, it's down so much. How can that be? Well, how it can be is the fact that the market's locked into bearishness. You're riding the lower Bollinger Band. You got your Gorilla Glue trade. You hear me talk about that all the time. The market is locked and loaded to the downside. In the VIX cash, You've had a small correction. If I'm right, the market's going to try to put on a little bit of a rally here. That would add more pressure to the selling. But if it drops, that's fine with me too, because as it drops, it means you get that little bit of the stock market rally with embedded readings. I, for one, will be all over it until the reading is lost. Then we look at the bonds. What did they do? Well, if we step back here, you had gone to the lower Bollinger Band, fought your battle in an oversold condition that never got the blue and the red line to start going sideways under 80. So if the market's going to rally, the logical spot it goes to is what I term the line in the sand. On charts, on daily charts, I label that number futures ETF stocks, the 18-day average of closes. It is from that number when you get contra-trend rallies, contra-trend because you're under the 18-day average, so the bias is down. That's where markets often go to figure out the next step they want to do. That's what we're doing right now. When we take a look at the 10-year note, a little different. Number one, the market had that pattern. Oh, I forgot to click that. I know what that is now. We know how to fix that. The market's got higher lows, higher highs. Okay, so what does that do for the chart? Well, it tells you that you've got a short-term rally. I think it will be capped if it can get to the upper Bollinger Band, but it's more likely going to just play around here for a short while. You ended this leg to the downside. You're starting an up leg, but because you got these narrow Bollinger Bands, it's not likely to go anywhere. In the dollar index, you have a market that's got sideways action of embedded slow stochastic. For it to say that the market wants to correct, the red line has to close under 79. It's right now at 91. That's a long way off. You also turn the trend down. Now, let me show you. You have a pattern of lower highs, lower lows. It's countered by the fact that it's all happening over the 18-day average. So if it does break, and that's the if, the support wherever that 18-day average is likely to be where the market stops. There's another play. When you get outside days down, if you take out the high of that day, it's called a bear trap. And bear traps often then take a look at the closest moving average or a Bollinger Band and often, not always, but often try to make a run for it. In the eurocurrency, you have a fully embedded reading. What does that tell you? It tells you that on rallies, the bears are there. They'll be looking at the market. Now, the low today was 105.16.5. You have not taken that out yet, so that what I've just said is very much in play. I don't like when a market first goes under when it's embedded the prior day's low if I'm looking to be short. British pound, I'm bearish as can be. I think today was just the day that, boom, you've let go. You're still very much in line down here. You have the embedded reading. Now, if you took out today's high, I'd all of a sudden take a look at the chart very differently and say something's brewing here. While this would rule the day, I have another rule that would say if you hit 124.01, something's wrong. It's saying that I'm going to go up to the nearest moving average. So it gives me another thing to look at. Confidence in my short sales and a stop that I might want to use. In Bitcoin, you're just running to the downside. This is a major washout taking place. You're at 28,795. If you're looking at some of the outside components of this, some of the lesser known coins, they're in big trouble. The coin exchanges are in trouble. I talked about that yesterday. I won't go through it again. You know, when you're 5 days under a Bollinger Band, I don't care how bad the situation is. I walk away because the odds are you're going to get an opportunity to the right-hand side. You're embedded, waiting for that to occur. And on rallies, I think the pros will be hitting it with both hands. I think people have had it and they want out of this. Brent versus WTI crude narrowing in a little bit. We haven't done that for a while. Market is caught between the upper and lower Bollinger Bands. I mentioned that yesterday. You see it crystal clear in them. This is why that learning Bollinger Bands and momentum with it is so darn important. It happens all the time. It's called the Enhanced Bollinger Band course on our website. All right, I don't see a trend here. I see a whipsaw now back and forth developing. Heating oil has a lower low, higher high. It is corrected, past tense now. An overbought condition? No, it has not. Both numbers are still in the 70s. If one of them was there, it's still overbought. I walk away from those type of ideas. And in that gas, you broke the back of the rally, came down hard, and now the market's just sort of in no man's land here trying to figure out what it's going to do next. You know, you put that all together, and I know a lot of you like the spiders, the ETFs, and so on. At 5:30 in the morning, I record my futures video, and at 9 o'clock, this video. You already know that your SPY, your DIA, they're all countering, and they're all looking at what? They're all looking at what's going on in all these in the futures market. All these interest rates are looking at that. You're looking at the USO, they're looking at what the futures are doing. I can go to the metals. You think that they're not looking at the silver, the copper, the gold? Absolutely. So the combination of the two is so important to this type of trading. And there are recommendations. Right now it's Valhalla. It is just so many wrecks to be doing with the markets. Most of them are on the short side, admittedly. You know, and I know a lot of people only want to be buyers. To me, that's like putting your hand behind your back and just always saying, I can't do both things. There's such a thing as a stop, an area where you're wrong. So if you're looking for trading ideas from a pro, and I think I fit into that category, that talks fundamentals, technical chart analysis, full explanation on the charts every single day, and on the weekend video for the longer term, we look at the weekly charts. Why not go here and take a look? Go to our website, take a look at what I'm talking about under the word research, or take your cursor, just move it right on up now. You'll see an icon. Click that on. It'll take you to that area. I'm Ira Epstein. You have yourself a great day. I'll talk to you all later.